So what I'm going to do today is I'm going to go a little bit off-piste. One of the things about Coda is there are so many places that you can see a great presentation, whether it's from Matt Weber, our exploration manager, who can talk far more eloquently about the technical aspects of the company than I can, or Tim, who talks about approvals and site world and access and all of those things. We have another episode coming up next week where Matt's been running around with the brother to that camera on site, getting pictures of footage and drill cores and everything that we do. So again, if you want to see a sort of, frankly, a much better presentation than I can give today, go and see the Gold Coast presentation from mid-September. Very little has changed in terms of, obviously, the company's key assets. What has changed, and what I'm going to talk about today, is around the structure of the register, what we've done in terms of funding the company, and what that means for the future. So what we've just done, why we were able to do that, because that's fundamental, and I think people miss that a lot. What we're going to do with the money, and then why we're doing what we're doing. And if I can answer those key points, I'd like to think I've done a better job than just standing up and saying, you know, our project is located in South Australia, 6 hours north of Adelaide, because there's 100 places you can find that online. I'm assuming everyone here understands pretty well where the assets are, South Australia, just next to Carrapateena, what we have, about 800,000 tonnes of copper, 30 million ounces of silver, and then about 30,000 tonnes of cobalt, which is currently not in the financial model and not in the flow sheet, which I'm going to talk to. So you can see here the share price, pretty stable over the last year or two. The VWAP, so the average price of the shares last year, was about just over 8 cents. Starting to dwindle, news flow. We've been in the lab for a long time. I've been told to stop messing around with spreadsheets by a couple of shareholders. They didn't use the word messing either. But the work was real. It took a while. Sometimes you just have to get your head down and do the work, and that is what we did. And it worked very well. It was very well received by the market. The share price shot up. We had some great trading days, and we've been looking at raising to move the drilling forwards. You can't move the project forwards to development without doing certain fairly expensive drilling. We currently have 3 rigs on site. The raise, which was off the back of phenomenal news, which I'm about to talk to in a sec, has funded the PFS forwards. Nobody likes raising, and I can tell you this, it is the worst part of my job. It is hard. It involves enormous amounts of work, late nights, and dealing with the brokers. I think we have the best brokers around. I really do. I think they're excellent. But it is a tough gig. And I think we did a very good job there. I think we got the best combination of money at the best price with the best register that anyone could have achieved in these circumstances, and that has funded the project forward. It's not so much by what's happening now as what we can now do with that money to move the project. We've been a little bit stalled over the last year. Late August, we released phenomenal game-changing results. I cannot overstate how important those results were to the company and the way I personally see this company and this project. That's allowed us to raise. Now we're moving on. So what happened? Well, let me just give you a bit of unfiltered view here, right? You've got a copper, cobalt, silver project. Cobalt's wonderful stuff. It's used in the cathodes of batteries. It's fundamental to electrification. Generally, the higher performance requirements required of a battery, the more cobalt is in a cathode. There are ways to remove cobalt from cathodes, but generally, again, that changes the battery chemistry. So, for example, your basic Tesla has a non-cobalt chemistry. Your performance Tesla has a cobalt cathode chemistry. Your Apple Watch, because it's smaller, has more copper in the cathode again. Solid state batteries, which everyone's very excited about, that don't really fully exist yet in a commercial sense, also require cobalt in the batteries. Cobalt's a challenging product. Glencore, from 2 mines last year, made more cobalt than was made by the whole market in 2017. They're running it really hot. There's all sorts of policy stuff, and that scared people a little bit. I've always taken the view that if you can base the project off the copper and the silver, which are commodities with deep, highly liquid markets, with relatively low technical production risk, we know how to make the stuff. 24 million tons of copper gets made every year. Silver is a simple byproduct, not dissimilar to producing gold as a byproduct of copper. If you can base the project off that, then you have a fundamentally lower risk, higher quality project. That's what we've done. Now, this new flow sheet is a leach-based flow sheet. As a rule of thumb, you'll normally try leaching first. If that doesn't work, then you'll go to flotation because leaching is cheaper and generally has higher recoveries. What we did was change the way that the pH is balanced within the leaching circuit, and that's quite new, and that's quite exciting. It's done in several mines around the world with this style. There's a lot of copper produced in this way. 20% of the world's copper is produced from some form of leaching. That's given us higher recoveries. You can see here roughly 95% of the copper, close to 90, well, just over 98% of the silver. And that gives us higher economics. We took $1.5 billion of revenue out of our financial model from the cobalt, and yet we still have a higher MPV. Not only that, the spot effect, so today's commodity prices magnifies those increases because cobalt is trading at historical lows. So we have this incredibly powerful change to our circuit. In my opinion, the market underreacted, though you'll never meet a CEO who thinks the market didn't underreact to their announcement. But the market underreacted, but we had a major increase in the share price. That's allowed us to raise, and now we're getting on with things. So those financial metrics, one of the things that you do when someone's looking at acquiring a project or funding it forwards is they start to stress test it. Under the old paradigm, and the old paradigm is still a solid project, comparable with many peers that have been bought out at a later stage or taken forwards, the stress testing does start to, and this applies to other projects as well, reduce the economics. Under the new paradigm, the stress testing has a much less profound effect because at forward commodity prices, copper and silver are so strong, and there is lower technical risk in the production of it compared to a cobalt-based flow sheet. I think the cobalt may one day come back in, but we're not talking about that significantly at the moment because the project itself is so strong from copper and silver alone. So again, this spot, we can't just change the spot numbers willy-nilly. We have to put out a whole announcement with all of the full sort of statements and governance around it. But within there, you can see the sensitivities that we did on these commodity price assumptions, and they're very powerful. You can see that right now at spot pricing, which is about 11,000 plus copper and about $48, $49 per ounce silver. Bear in mind, we use 9,260 copper and $30 an ounce silver. The value of the project has gone up enormously, getting close to doubling it. So we're in really good shape. Roughly, as we see here, post-tax $1.2 billion at those lower assumptions, likely to be close to 1.4 today. And that's a really robust project. Compare that to our peers, compare that to other projects that have been taken out and projects that are taken forwards, you'll see that compares very favorably. So why haven't you seen a sudden re-rate? Well, you kind of did in August and September, and that's allowed us to take the project forwards. We've got a 30% higher share price today and over $13 million in the bank right now, with another $1 million to come in December from this raise. We've got a fair bit of work to do. So one of the other things that people look at is the stage you're at, and they say, okay, what are the risks in this project? And generally I find in commercialization of a project, what they want to see is certain questions resolved. They want to see geotechnical assumptions firmed up, pun intended. They want to see the water questions, which we understand very well, but then there's a difference between understanding them and having definitive evidence and data. And this latest raise, taking it from an 8.3 million raise to a 12.3 million raise, gives us the ability to do that water drilling, which doesn't sound very exciting, but is actually fundamental to everything about the project. One of the first questions Dwayne ever asked me over a year ago was, what about the water and when are you going to solve that question? Because you've seen this many times, right? First question you ever asked me in Sydney. And so we now have the money to do that. That's exciting. You're going to see a lot of news flow, a lot of results coming over the next little while. So PFS ongoing, just in the process of hiring a study manager. There are 3 rigs on site. Our field team are on site right now. A lot is happening. That'll get sample for met variability work. That will get geotechnical sample. We've used very conservative assumptions. There is scope to improve and to run the mine a little bit hotter in the plan if we can get better geotechnical data. Water data resolved. Environmental approvals advanced. Rebuilding the mine plan, because the current mine plan is optimized on the other flow sheet. There's a huge scope to improve the economics by optimizing the mine plan to the updated flow sheet. And it can only improve because otherwise we'd use the current mine plan. So there's a huge amount of uplift there. So why are we doing this? PFS is the most fundamental step in the road to development. Scoping study is a bit of a nebulous term. I would like to believe our scoping study, I've certainly been given the feedback that our scoping study is up there with the best. But there is still a world of difference between a scoping study and a PFS in terms of confidence, in terms of de-risking. We have seen, there was a great episode of the CodCast, and it was driven by research that Katrina, our commercial manager, did, looking at what drives the value of companies, because we wanted to know that so we could drive the value of Coda. And the overwhelming answer was pre-feasibility studies. Advancing and de-risking the project through that stage gives companies in the sector a huge value uplift. I believe that that is the most worthy goal we could possibly have right now. I believe it will unlock an enormous amount of opportunity, whether that's through commercialization of partnering, a project level sell down, self-funding through due to value accretion, or potentially looking at offers as and when they occur, and if they're in the best interest of shareholders in terms of a takeout. But what it definitively will do, in my opinion, is help us advance the project through pre-feasibility study into definitive feasibility study and demonstrate just how robust this is. And I have a lot of confidence that we're doing the right things in the right way. Timing. You couldn't ask for a better time to be doing this right now. Copper and silver at historic highs. We've gone from $8,000 a ton into the 9s, into the 10s, now into the $11,000 per ton, roughly $5 a pound. What's the spot price today, Katrina? Do you know? About, yeah, solid. I think it's about $5 a pound. And then $30 an ounce silver, that's gone up to over 50 over the last few weeks. And that's driven by a fundamental structural deficit in the supply of silver, which is used in solar panels and a huge number of other sort of future energy applications, combined with also a contagion from gold, because effectively silver is also a store of value and money to a lesser extent. And the beauty of it for me is it's also used industrially. You've got those factors all happening just at a point. New World is gone. Xanadu is gone. The Hillside project, Rex Minerals has gone. There's a huge amount of lack of quality projects in that second tier. What I call the developable projects. $2-3 billion CapExes are miserable. The sub 500 million US dollar CapExes, that's what a lot of people are looking for. That's where we sit. De-risk the project, get this money deployed fast. I've never seen a use of funds so clear in my life in all my years of running public companies. We know where the money's going. It's going into the ground, and I'm excited about that. If you want more background details on the company, come and chat with us afterwards, but also please do go to our updates page on the website, because there are better versions of this speech. And with that, I'll thank you and pause for any questions. It is in the current flow sheet. So the economics you see assume that cobalt, 1.5 billion Aussie dollars in our model, so that's actually on a net present value, no, it's a revenue basis, is going into the waste dump. Now, no prizes for saying, yeah, hang on, why are you throwing $1.5 billion away? Surely there must be a way. And surely there must be a way, and we will believe we'll find it. For sure, we will be looking at that very carefully. Yeah, you certainly don't want to ruin your optionality. If I were a gambling man, some or all of that cobalt will come back in long before the plan is to chuck it in the waste dump. But what we wanted to do was to demonstrate that you don't need the cobalt. The cobalt is cream. But we're not going to throw it away either. It's not going to end up paste fills underground or something like that, no. No, we'll get a handle on that long before. And we come up with new ideas. Mike, who's sitting in the back, came up with an idea last week, which we're looking at. And we've got other tests ongoing. We're not talking about a huge amount because we see the project as totally robust from the copper and the silver. And that's a better message. At the point we have total confidence or a very solid level of confidence, we'll say, okay, this is what we can do with it. And maybe you only get 25 or 30 or 40% of it, maybe you get 90% of it, but I think you'll get some. It's always hard to foretell DFS until you've done your PFS, of course, and your last thing in your PFS is your DFS plan and scope, budget, and execution. But the reality is a DFS should be doable within 1 year, subject to piloting requirements by banks. And we currently have piloting within our PFS plan, which means that should materially reduce any piloting requirements in DFS. which in my opinion is a good thing. You prove it works, and then the DFS is really about locking down those assumptions. It's about just under 12 months from now. It was 12 months from the commencement of drilling, which was just under a month ago, 11 months. Yes, yeah, which would be unbelievably quick in modern mining terms. You're looking at an average of 13 to 14 years from discovery to development. And you know, when New World got taken out, and the same when Rex got taken out, I got messages from shareholders saying, why can't you do the same? And it's like, well, Coda's existed 4 years. These guys have been around 20. We're going to do these things a hell of a lot quicker. That's my absolute, well, we're just going to do a lot quicker. But we are at a less mature stage, and sometimes I feel like people are shouting an 11-year-old for not being tall enough. It's just a question of getting the work done in time. You know, it's the stage. I think we've moved very quickly as a team. Right, I mean, one has to define conventional copper recovery circuit. You've effectively got acid leaching, which is probably the first thing I'd look at. Acid leaching won't work because it's a dolomitic black shale, so it just neutralizes the acid. So you consume, from memory, it was about 50 liters of acid per ton of ore, which is a huge cost. We tried acid, tried cyanide. What else did we try? Thiosulfate, ammonia. It was the ammonia breakthrough that got it back into a leaching paradigm. But when that failed, we tried glycine. When that failed, we went into a flotation, which works pretty well. But you can't separate copper and cobalt in flotation. So the holy grail was always separate copper and cobalt and make a leach work. And that's what we did after 18 months of work in August. That's right. So I've been involved with the project since 2016. And by the point I got involved with the project, people had had a good look at a lot of things. We tried to replicate that. We had limited success. By 2017, we'd moved into a flotation paradigm, and that's worked and been optimized pretty heavily. We didn't discover, but we did define Emmy Bluff in 2019, and into 2020 was the first resource. Then we confirmed that actually behaves better and recovers better in flotation. And along the way, we've had 2 work streams. The first is to make flotation work better, and we did. We took those recoveries from low 70s into low 80s, and then at the same time to find a way to separate the cobalt and leach it, because obviously that's cheaper and more effective, and that's what we've done. But we're a fairly conservative company. I know of companies out there that probably would be claiming the cobalt's recoverable. With the copper and the silver, we've done a significant amount of testing, and each time it's replicable. You know, we can replace the result, repeat the results completely every time, and we get very solid 95 to 99% recoveries every time. With the cobalt, it jumps around, it's unreliable, you don't quite know what it's going to do. Some things are working, some aren't. We can't explain why they're working. There's just a bit of a mess. And so we just haven't been able to say, right, now there are companies out there that will cherry pick the best results and claim them. We are not like that. So when we have it that we can repeat it, replicate it every time, we'll say, hey, this is where it's at. But again, if you compare us to a lot of our peers in terms of economics, on the copper and silver alone, we're so strong. It's not to say we've given up on the cobalt, but we're so strong, we're saying this project goes forward on the copper and the silver. We'll tackle the cobalt along the way. But we do need more sample. So that's why we've got 3 rigs in the... So each hole is effectively 3 uses. Resource infill, geotechnical, and the positioning of the holes is really driven by geotechnical requirements, and then met sample as well. And so we're getting a lot of bang for our buck in the drilling. As I say, we're a bit stalled for sample at the moment. So when we have more sample, the first priority will be copper, silver, variability work, because that is the professional and correct thing to be focusing on as part of the PFS. We'll then be able to use that for some additional leach testing. Sometimes you come up with an idea, something, you know, it's like, okay, this is something we can do. As I said, Mike came up with a new idea, which we're going to test as soon as we've got enough sample. You know, there's a whole bunch of things happening. As it stands, we need a little bit of a breakthrough with it. So we don't tend to spend a lot of time. We got some guys who spend a lot of time thinking about it, but as a team, our focus is getting this PFS moving. So it won't be on the critical path. But there's a big prize in there. I mean, you know, as a rule of thumb, if you've got 200-300 million to play with, it's never going to work. If you've got $1 billion plus, you've got so much money sitting in those tails that you can do an awful lot with it before it ceases to be an economic advantage to process it. What is more likely to impact the share price? Is it advancing the project through de-risking, or is it increasing the NPV yet again? And in my personal opinion, you obviously try and do both, but the thing that will move us on, and again, this is from talking with a huge number of hedge funds and groups, is that advancing the project through those de-risking stages should be the most value add that we can make. And PFS is hard, it's a lot of work, but I actually really enjoy that work, it's fun.